Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. Today we're going to talk about some earlier, more aggressive entries that you can use to get into a stock. And some of the things we're going to talk about are actually also inside of our home study programs, and all of those are on sale for the holiday season, and we'll tell you how to find out more about that at the end of the show.
So today we're going to talk about trend lines and using that as an early entry point, and we're also going to talk about the Shakeout Plus 3.
Right, but first let's take a quick look at the market.
Well, we had an ugly week in the market. Earlier in the week, Monday, Tuesday, and Wednesday were in the red. Now, Thursday, we got a bit of a bounce, but it was on lower volume. China data shook up the market after their imports fell for the 13th consecutive month.
Right, and that's why the outlook changed from uptrend under pressure to full-on market in correction. As of Thursday's close, you can see here that we had 9 distribution days on the NASDAQ.
That's a lot.
That is a lot, and we had 8 on the S&P. And the NASDAQ, though, was still above the 50-day and above the 200-day lines, but that all changed on Friday. It fell through both of those benchmarks, and that marked the end of that uptrend.
And the price of oil has just cratered. It's down below $36 a barrel to levels not seen since February 2009. And the commodities-heavy index dropped well below the 50-day moving average. And a look at these indexes shows a huge change in personality and in trend. And some leaders have taken a hit also.
Definitely. Talking about changes in personality, look at Fleetmatics. That is a dramatic change. That's Jekyll and Hyde right there. Now that kind of action really is a trend changer, and you can see the stock crashed below the 10-week moving average, below the prior buy point, and volume spiked well above average. Now, LGI Homes is another example. Last week, it flashed this nasty reversal, which we mentioned on the show. And while it did close above that 10-week line, that's possibly a good sign, but if you're looking at the rest of it, that's really a major warning sign. And it was a good opportunity to count your blessings and take the profits if you still had profits in that stock. Because at that point, the chances of it going lower were much higher than the chances of it turning around and climbing back up. And that's especially true given the selling pressure that we already had in the market. And look at that, it proved very true this week.
Now the FANG stocks. Is it time to sell them? Facebook dropped down to the 50-day, and a look at Amazon and Alphabet show them curling over just slightly. It's different from when they were in a nice, tight, or flat trading area or a rising trend. Netflix has also come down below the 21-day moving average. Some other big names that dropped included Starbucks, which is below the 50-day line, along with Nike. And as you go through the IBD 50, there are other names that dropped.
And when you see the market weaken and roll over like that, you have to take the time to put together a selling plan so that you know when you're going to take your remaining profits and also cut losses if you have them.
So go to our site for more information on how to handle corrections at investors.com/investingshow.
Now, in earlier shows, we did a series on bases and how to determine more traditional buy points. So today we're going to look at some alternative, more aggressive early entries with the caveat that these really work best in a strong uptrending market.
Yeah. Early entries when the market is in a strong uptrend allows the investor to get into stocks earlier. Now, these entries are more advanced, and there's nothing wrong with sticking to the traditional breakout or the pivot, okay? But it's worth stretching your knowledge and learning a few new tricks.
Absolutely. Now, one way to spot an earlier entry is to draw a trend line. Amazon gave a good example of this earlier in the year when it was still working on this long consolidation. Now, using this former area of resistance, you could put the buy point at 389.47, 10 cents above this peak. But more aggressive investors could draw a trend line to spot an earlier entry.
Now, the week of January the 30th, Amazon rose 13% for the week with volume that increased 108%. Now, if you take a look at the trend line that we're drawing right here, you can see the early entry point. Now, a couple of interesting things to note here. Amazon came back above the 10-week moving average. And as discussed last week, look at that 10-week line coming back above the 40-week line.
Now, you can draw the trend line starting with the peak on the left of the base, then crossing over these lower points of resistance. It's a more aggressive approach, as we said, because the stock hasn't yet completed the base. But in a good market, it can give you a chance to get in a little earlier and build a profit cushion a little earlier.
If you look at the RS line, it wasn't in new high ground, but it was in a rather vertical position as Amazon began to take off. Now, following this, there were some nice, tight areas showing institutional support at that price. And tightness continued for several weeks as the stock found support around the 10-week line in red.
Right. And by the way, this was right around the time Amazon was getting ready to report earnings on April 23rd. Now, not all early entries work, but this one did, and it meant you had a profit cushion to help you sit through that earnings report. And when Amazon did release those numbers, and they were good numbers, it shot higher, and you could have added to your position there.
Now, the week of April the 24th, Amazon shot up 18% with volume up 159%. So what does that mean? Well, that means 38 million shares were traded. Now, you multiply that times the buy point of 389.47, and that's a lot of money on the table. Big money. And from there, look at the move that Amazon has made.
Now, Apple shows another example of how this works. This is a daily chart, and you can see how Apple formed a cup with handle as the iPod craze was really taking off, going strong in the fall of 2003. The standard buy point here is $24.94, 10 cents above the peak in the handle. But by drawing a trend line, you could pinpoint an earlier entry.
Now, we drew our trend line from the peak in the handle across 24.10 down. Now then, as Apple came through that line, February the 27th, it rose nearly 4% and volume increased 48%. So this was an early entry into Apple. And as Matt said, the company was on fire selling iPods, and so this was early in Apple's big run.
If you're going to use these early entries, this is very important, make sure that you have good sell rules. So in this case, it worked, and Apple went on a huge run over the next several years. But before that happened, note how the stock paused and pulled back just slightly after clearing the trend line, but it found support at that trend line. So that was healthy action, and it made it easier to hold.
Now, remember that early entries work much better in a strong market, but they can help you get in early on some big winners. And as always, look for the best merchandise that you can find in the market before using these trend line strategies.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
Now that we've taken a look at using trend lines to spot an earlier, more aggressive entry, let's take a look at another one, and this was used by legendary trader Jesse Livermore, and it is called the Shakeout +3.
Now, we're going to use Lululemon as an example. So here we are. Let's go back to 2011. This is a more rare pattern, which consists of two sharp sell-offs. After the first sell-off, there is a second one, which undercuts the first sell-off, and it generally happens in a fairly short period of time, within a few weeks or so, maybe less. Now, it can be similar to a double bottom structure, or it could be within a double bottom.
Now, here's the first sell-off for Lulu on October 4th, 2011. It hit a low of 42.18. The second low came on December 1st at 41.70. Like with the double bottom, it's very important that that second drop undercuts the first. Since Lululemon did do that, and it had these first two shakeouts, you're now looking for the +3, a rise of at least 3 points, which can be adjusted, as we'll talk about a little bit later, depending on the price of the stock.
Now, the yoga-inspired apparel maker was in the shakeout +3 position, and then came the market's follow-through day on December the 20th. This was confirming a new uptrend. So if you were building your watch list, you were now poised to look for stocks staging breakouts, and Lululemon had set up in the shakeout +3 formation.
So from the low, you want to add 3, which means from 41.70 plus 3, that's going to equal 44.70. Lulu delivered on January 4th, 2012 with a nearly 9% gain to a price of $51.15, meaning it was now more than 8 points, well beyond 8 points, beyond that earlier low.
Now, with any breakout, you want to see big volume, and this is either 40% or greater on the day of the technical breakout. And Lululemon's volume surged that day with volume more than 104% above average. Now, the stock climbed from a pattern which was first identified by legendary trader Jesse Livermore, and it climbed higher for about an 81% gain.
Not bad.
Not bad.
Right.
We'll take that.
Now again, the shakeout +3 pattern is fairly rare, but it can potentially lead to some nice gains. And we got another example of it recently with Acuity Brands, which makes lighting products.
Now, this company, yes, they make these LED lighting, and it performed very well recently coming out of a double bottom structure, and it provides another good example of the shakeout +3 pattern.
So here's the double bottom that Acuity formed this year from August to October. The first sell-off came as the stock hit a low of 184.92. Then the stock formed the second leg down with a low of 168.33. So you have the two shakeouts, and now you're looking for the +3. But in the case of Acuity, the share price was about $170. So you might adjust that bar to say 6.
And the day it hit that mark, the stock rose almost 4% on volume that increased by 184%. And the stock bounced off the 200-day moving average line, so all of the stars aligned for an investor to get in a little bit early using the shakeout +3, or sometimes a little more with expensive stocks. It could be a shakeout +6.
Now keep in mind that this is an earlier, more aggressive entry because the standard buy point for a double bottom is 10 cents above the peak in the middle of the W. So for Acuity, that would be 204.52. Now actually, Acuity went on to form a handle as well. So that presented another buy point, potential buy point of 202.30, 10 cents above the peak in the handle. But either way, that shakeout +3, or in this case, shakeout +6 or so, gave an earlier entry.
So trend lines and shakeout +3s are examples of how investors can get in a little earlier than the traditional buy points. And these are early entries, so be sure to keep an eye out for any weakness or any signs of selling. Be sure to just get out of it in case your trade isn't working out. Not all of these early entries will work, but some of them work out really
Very
well and can get you in a little bit earlier. If you are looking for that very special stocking stuffer or gift for your favorite investor, or maybe for yourself, to give yourself a Christmas gift, we have a lot of holiday specials. No matter what level you're at, beginning, middle, or advanced, we have a lot of home study kits, and all of our products actually right now are on sale.
And you'll need a pretty big stocking stuffer. Or so a
They're a
pretty
little
big
bigger.
stocking, I should say,
Yeah.
because these have these great chart example books, and
They
they're
do.
huge. So they're really helpful for learning, and they're available for any type of level, whether you're a very experienced investor and want to learn more about charts, or fairly new to it. We have beginning level as well. They're on sale now during the holiday
Everything,
season.
IPOs, short
Right.
selling, anything you can imagine.
Yes, and you can find them at investors.com/investing show.
Okay, see you next week, everybody.